Well, welcome to our Wednesday night webinar here focused on US expats looking to buy property in Spain, which has been a huge topic this year. We are seeing so many people make the move. 2025 was roughly 5 times the amount of Americans that made the move than 2023, and we are just seeing this flood continue. So I'm so happy to have a couple guest speakers on today that really know the industry here in Spain in and out. They both specialize in working with expats. I'm going to have themselves introduce themselves in just a moment, but first there is a Q&A button or just a question button at the bottom of your screen. If during the presentation you have any questions at all, please go ahead and type those in there. We will have a Q&A session at the end in order to make sure that all of your questions do get answered. And in that same Q&A session, we will also have a QR code on the best way to reach one of us three. My QR code will go directly to book into my calendar. Mark's, as he described himself as a dinosaur, his will go just directly to his email, and for Monica's, it will actually go to the direct form to get pre-approved through Habeno for a mortgage here in Spain. I will go ahead and let these two introduce themselves and their companies, and then we will jump into the presentation. Monica, it looks like you might be muted right now, but do you want to go ahead, introduce yourself and Habeno?
Good, thank you, Jacob. Good evening, everyone. So my name is Monica, as you perfectly stated, head of partners at Habeno. So this company based in Spain for the last 5 years. And basically our core business is to help our clients getting a mortgage, financing the dream home quickly, safely, most important, smoothly here in Spain. So basically, it's just accompanying you since the moment you start viewing for potential properties and so on till the most important thing, getting your keys.
Perfect. Well, thank you, Monica. And Monica will take the first part of the session talking about what the mortgage process and home buying process looks like and what Habeno looks at for mortgages. They do specialize in mortgages for expats. So a huge point for obviously our US audience that this is focused on today. Mark, if you can go ahead and before you jump in, Mark wears many hats as a part of his law firm. So also has a buyer's agency or a real estate brokerage is what we'd call it in the States. But yeah, go for it, Mark.
Hi, nice to meet you. I'm Mark Marsal. I'm tax lawyer, okay, and then I'm working in international tax field for people moving to Spain or with interest in Spain. Indeed, around 98% of our clientele is coming from abroad or have their origins abroad, and of them, around 40% of our clients have ties with the United States. And then we were created in 2006 by a team of people that we were coming from KPMG in the International Tax Department here in Barcelona. And then this presentation, we're going to be explaining you many things about some tax aspects in connection with Americans when buying here and some kind of clues also in relation with tax residency matters and things like that.
One interesting point between us three, we are actually spread almost on opposite corners in Spain. Monica is down there in Malaga on the Costa del Sol. I am here in Valencia looking out over the Mediterranean as we speak. And Mark is up in Barcelona. Although Mark seems to pop around and be a little bit of everywhere at once. But I believe home base is actually in Barcelona. I myself am a financial advisor for US expats living in the EU. I've been a financial advisor for over a decade. Currently live here in Valencia with my wife and puppy. Although we are getting a new member of the family here potentially any day. My wife is pregnant. So if you do need to look at your financial scenario and financial planning, I would encourage you to book in quickly before I head out on paternity leave. Certainly looking forward to that. and to having a new son. It's our first, so we're also a little nervous. But Holborn Assets, we are a global financial advisory company. We've been in the business for almost 30 years now, manage a little over 3 billion in assets under management, have clients in over 100 countries. I am really the token US advisor for Holborn, and so that's really my specialty and what I work on. Worked for US financial advisory companies such as Morgan Stanley and JP Morgan, as I was actually born and raised in Portland, Oregon. Been here in Spain now for a few years. And yeah, so please reach out if that's something that you really need. And I've found that many Americans do for reasons that we'll talk about here in just a few minutes. But yeah, Monica, if you want to go ahead and kick the presentation off.
Sure. Thank you. Well, as I before briefly stated, Habeno is mortgage company for just summarizing. Basically, we are not the lenders, but we are the ones helping you acquiring the best loan offer. Mostly, we work. With both non-residents and residents over here, but our company, it's important to understand that it was built out of a personal experience from our CEO, who is Pascal Denies, Swedish tourist who came here to Spain, fall in love with Costa del Sol. Who doesn't, obviously, and wanted to buy a property in here. And that's when he and his family found or learned about how the bureaucracy works here in Spain, which it's a bit traditional. It's not as scary, but that's true that comparing to some other countries may be a bit more, I will say, slower, quite traditional, basically. So that made the whole thing a bit more longer than expected and a bit of a headache. So basically he thought, why not to help any other, because of course there will be plenty like him, wanting to acquire the home dream order. So that's how Habeno started. And since then, we've been helping for over plus 20 nationalities buying and acquiring their dream home here. And basically, how we're doing, we are a fintech company, and we just have like a contact with whoever would like to get like a pre-approval. Because the first thing that I will always advise you is getting your pre-approval before starting to viewing the properties. Because right now, and for the last few years, the interest rates here in Spain are low, quite not comparing to any other country, but I would say with most of them, quite lower. It's around 3%, I would say. Could be even 2.5 in 3.5 in between. That's the range for non-residents, which is really competitive. Why will someone get an equity release or refinancing any other properties in order to get their home, like vacational investment or moving in here? So that's going and that's working really good for our clients. So basically, as I was saying, what we do is we have a contact with you. We see the profiles according to the banking, traditional Spanish bankings in here for the professional profile. If you're an employee, self-employed, business owner, those are basic requirements that the banks will ask for in terms of documentations, and we guide you since the beginning, knowing which kind of documents they will require. We build up the credit act, and we start looking for the properties, guiding you also with Jacob through the kind of the scenario that may be the best fit for you. Also matching the basic requirements for the Spanish banking are quite basic and very similar to any others, like the DTI. which is nothing else but the debt to income ratio. Basically, are just the incomes versus the expenses that you may have, and just the age in terms of the loans that must be paid off by the year the persons who are asking for it will turn 75, and the long term will be about 25 years old in the long term. So those are basic requirements that the banks may look quite not as stubborn but traditional, as I said. But we work on your basis. We contact all the banks that we are working with, which currently are around 8, and we compare the best offers for you. We present to you, and also knowing how the currencies may behave and which one may be the best for you. We always advise you, but of course, our clients will be the last word deciding which one to go. So that's working really good in terms of speed. We do everything on your behalf. You avoid also going to the notary history in different channels, back and forth, because here at the moment it's still, unless Mark will have, for example, like attorney, the power of attorney, you need to go and come in for some acne and so on, which is always a really good excuse to come here for Spain and enjoy some tapas and some nice weather. But obviously, it's not the best scenario or possible for everyone to be traveling all the time. So we are more than happy to do everything on your behalf. And basically, that's really a time saver, I will say, the most important thing. And for how it's working at the moment, for non-residents, the maximum LTV, which is the loan to value mortgage, in other words, for non-residents, it's the 70% of the property price, which means that you need at least to have a maximum on your own funds of 30% of the property price, plus an average in between 10 to 15% of the property price as well in taxes. Those taxes may differ basically in terms of the area that you may be looking at to buy. It's not the same, for example, Catalonia or Andalusia or Comunidad Valenciana, where Jacob is at the moment. So that just a small difference. But further than that will be some legal fees, the transfer taxes, and those will be like the summary, summarizing those 10 to 15% that I was mentioning. So, for example, if you were thinking on buying like easy case study, property price of 300,000 euros, and the mortgage may be the maximum for non-resident, as I said, 70%. So you will be applying for a mortgage of 210,000 euros. And the down payment, therefore, will be 90,000 euro, just as out of the funds with no taxes. If we summarize those expenses, which are legally required and so on, that must be a total of capital required of over 120,000 euros. So those kind of things that maybe you are not aware of at the beginning, we advise you and we guide you.
Monica, do you have a lot of U.S. citizens that come in and are completely shocked with the amount of, well, down payment required and then the closing costs?
Yes, I understand, because I do believe that in the US it's short, like a smaller one, right? Like around 5%, could it be?
Yeah, I mean, when I bought my first house at 24, I put 3% down. on my house. And then I had the seller actually covered closing costs. And so it's a very different program. And particularly when I know that, a lot of Americans when they do move are retirees. And so that 75 age limit, it can be pretty important when they only have, ability to get a 12, uh, you know, 10, 8-year mortgage.
Yes, no, I understand, but also something that we learned for the last 5 years is like there's no way, no one case like the other. So even though that's true that what I said that the Spanish bank are quite traditional and those are like quite like a guide for them, it's flexible and they will not it's flexible for calling it somehow, or otherwise we try always to find the gap over there in between, obviously to get the best loan offer, but also to get the some gap, as I said. Like obviously, if you're retire, they will check for the retirement costs that you may have still holding for them, for the expenses and so on. But also, if you have private, other incomes and so on, that's a way to calculate the debt and the payout in a short term. So we are always then to find it. No worries about that.
That's good to hear. Well, yeah, Monica, certainly appreciate you joining. Anyone who is looking at a property, not sure what they can afford and what that will look like, please reach out to Monica and Habeno. They will be your best guide on getting that mortgage and really making sure that you don't put an offer in on a house that at the end of the day you can't get a mortgage for. You don't want to put that cash down. I think that the Spanish mortgage system, it resets those expectations a little bit, and Monica and her team can certainly guide you through that. Now that we've kind of taken just a brief look at you're buying a house, what does that actually mean for consequences? We talked about some taxes up front that are part of those 10-15% closing costs, but Mark's going to walk us through the consequences of maybe buying a house here in Spain. So Mark, if you can take us away.
Hi, thanks, Jacob. Okay, then first of all, okay, I would like to highlight that buying a property in Spain is not meaning by any mean that you're going to be a tax resident in our country. Okay, then in this first slide, okay, we are showing when somebody could be understood as being a tax resident in our country. It's different as it is in the US. In the US, if you are a national or green card, you are forever and ever a tax resident there and obliged to file. In Spain, you are only tax resident here, okay, besides of your nationality, if any of these three main points happens. One is the typical rule about the days of you staying in the Spanish soil, okay? Then the general rule is 183 days, okay? And then you are in a calendar year basis, you are more than 183 days, then you would be counting as tax resident in our territory, okay? There's a concept to bear in mind, it's the concept called temporary absences. Okay, generally speaking, is that maybe you were not exactly 183 days because during a weekend you were going for a 2-3 days flight to Rome. Okay, but then this kind of concepts of temporary absences are also counting. It's a long and quite extensive concept. And then just bearing in mind that it's important, and also bearing in mind that just 1 minute in Spain for a day, it's counting as a whole day. Okay, it's an important thing when people are counting days. Then another option for you being a tax resident in Spain is you having in Spain the center of economic interest. It's a kind of concept that it's flowing between different kind of concepts about what's the center of economic interest in the sense of level of incomes you are obtaining in Spain, where you are performing the work, where you have the majority of your wealth. Okay, then there are different things here to bear in mind. But generally speaking, because of you buying a property in Spain, this is not generally leading to the fact of you having the center of your economic interest in Spain, and because of that, you being tax resident in our country. And finally, there's the thing about the legal presumption. If your legally married spouse and minorate children are living in Spain on a permanent basis, let's say more than 183 days per year, okay, you could be also considered as being tax resident although you're not being following that rule, and then you have to prove, if that's not the case, that you are not a tax resident. For instance, woman and the woman and the kids are living in Spain, okay, and then the husband is spending a lot of time in the US working, maybe 200 days per year, okay, and then he's not a tax resident because of any of these rules. Let's figure he's not resident because of the center of economic interest. He's not resident because of the days he's staying in the Spanish soil, but he could be asked to prove that he's not a tax resident because the wife and the minor age kids are. Okay, and then it's just like changing the way he has to prove the evidences of being or not being a tax resident in Spain. Okay, then besides of all of that, sometimes there are conflicts of tax residence. Okay, and then you have to go to the tax treaty, in this case with the US, and then the rules are these ones are shown here. In case of that, the two countries are understanding you being tax resident, then these are the rules the tie-break rules in this order. First of all is in which country you have a permanent home at your disposal. Where's the center of your life in terms of both economic and affective interest, and so on, okay? Then always when planning to be in Spain, yes, sorry, Jacob.
No, I was just asking, do you run into Americans who try to play that 183-day game often and lose because even though they're under 183 days, they miss a lot of these categories?
The usual thing about Americans is that when they used to come to Spain, okay, there are lots of things that every case is a different world. There's people coming here with LLCs that are passing through income, other ones that are having trusts, other ones that are having relevant brokerage accounts in the US, okay, then all these factors make that many times not planning in advance personal income tax and wealth tax in Spain could be a nightmare if things are not planned properly. And then when planning things, what we do is doing the different kind of scenarios for the Spanish taxes. And according to that, we decide if okay with they moving here in Spain as being regular tax residents, okay, or if we plan any kind of a special tax regime for them, that we have the so-called Beckham regime and the so-called Mbappé regime just for the region of Madrid, or maybe we decide that they just are in Spain or under 183 days in a clear manner, and they keeping the basic time being in the US, let's say, for they not falling under any kind of risk of tax residence in Spain and just being considered as plain non-tax residents in our country and just being paying taxes for that sole property they are owning in Spain. Okay, and then we plan all those things, all in all cases, of course, together with immigration permits also. If they come because they are retired with a non-lucrative permit, if they come under a non-digital nomad, then it's about planning, and if planning, things can clearly controlled and not being in gray areas, let's say.
Well, I guess now let's look at what does it actually mean to be that tax resident, right?
Yes, being a tax resident could be meaning, depending on the case, it has not to be such a big thing. For instance, we have clients of us that they are coming from the US, having not such a high level of retirement pensions or something like that, and they are mainly living sometimes of their brokerage accounts. Okay, and then these people sometimes are just earning passive incomes because of dividends and capital gains. And then if being that the case, that we have on a scale of personal income tax that it's applicable only for this kind of incomes. This is dividends and capital gains, okay? And then that scale goes from 19% till 30%. Then we have cases of clients of us that if they have this kind of passive incomes, it's not such a big thing. Other clients of us, they have the thing that they are maybe doing withdrawals from IRAs, 401k, something like that, okay, or they are earning business incomes, whatever it is. And then it's when it comes the personal income tax scale that goes in a progressive manner from 0% till in some cases 54 in certain regions. Then we always plan for the concrete case what we can do with playing with these two scales to plan properly, let's say. And finally, there's a thing about the wealth tax. Wealth tax, generally speaking, could be a little bit of pain in the ass, okay, for people that are high net worth individuals or ultra high net worth individuals coming from the US. Generally speaking, now we have a lot of regions in Spain that if your net wealth is under 3.5 million euro, you are in many cases out of the application of the wealth tax. It happens in regions such as Andalusia or the Balearic Islands, for instance, okay? And then we have other regions that not, for instance, in Catalonia. In Catalonia, if you have a net wealth that is exceeding €500,000, then you could be under the application of wealth tax. assess it case by case and seeing how we can play with exemptions in one case or the other. These are the general scales I told you. This is the one in the left side, the general taxable income scale that goes from 19 to 47. You apply this scale when thinking about business incomes, when thinking about labor incomes, rental incomes. Okay, this is generally this scale. And the other one in the right side is when you're thinking about passive incomes such as dividends or capital gains. As said, the one in the right side, it's a scale, it's applicable all over Spain. It's the same scale you're going to be having in all regions, but the one in the left side could slightly vary depending on the region, and it can reach in some cases the 54. It's not meaning that if you are reaching some threshold, you are applied a 54 flat. It goes under a scale system, and then every little range of the scale is taxable under their own effective tax rate, let's say, And then at the end of the day, you make an average, and you have a kind of effective tax rate for the whole, as if you would be having in the US. But with the main difference that here we have these two scales, and as far as I'm seeing with my clients from the US, they have an effective tax rate for the whole thing. And here we have these two distinctions, let's say.
Yeah, and in the US, right, we also have some of the capital gains that we have that limit up until 0%, and then we go to 15%. As you can see, these rates get much steeper, much quicker than in the States. So certainly something to keep in mind, but don't let people scare you that first dollar is going to be taxed at the 47 or even 54% rate. That's I think a common misconception when Americans make the move.
Indeed, we can do many tax plannings for protecting things in many manners. For instance, we have some clients from the US coming with LLCs that they are passing through, and maybe we find a way talking with the tax advisors in the US to switching the system to a C Corp, and then only being paid when in Spain through dividends or something like that. And then we keep in these dividends by applying the scale in the right side with a much more contained level of taxation. Every case is a different planning, and then we are used to do this for 24 years now. Then happy to help.
Yeah, that C Corp election can be important. I take advantage of that one myself.
Then here, okay, we are talking about a little bit of the residential rental income. It's typical that many clients of us, when coming here, they buy a kind of holiday home. Sometimes they are thinking about sometime coming here to definitely retire and being here for the long run, but sometimes they are buying and staying a couple of months, whatever, and then they rent the rest of the months, okay? Then knowing when thinking about that, if talking about non-European Union tax residents, as the US people, the Americans are, okay, we have a flat rate for non-residents. It's important for non-residents. You are not a resident in Spain. You just come here 3 months, whatever it is. You use the house. You rent the other period of the other months, okay? And then for that income, you are paying a 24 flat. It's a 24 flat on incomes, on gross incomes. Non-deductible expenses are allowed. But then at the end of the day, this is not your final tax burden taxation. You're going to be taking this amount, and as far as you are a whole tax resident in the US, you're going to be going to your tax accountant in the US, preparing your tax bill for the year, and then you're entitled to take these amounts paid as tax for non-residents in Spain for the rental as a tax allowance, as a foreign tax allowance. And then you can apply that against your tax bill and your tax due in the US. Now we are in the course of a special time because the Supreme Court is analyzing if it's going against the European Union principles that the Americans and rest of people of outside the European Union, they are not allowed to deduct expenses when calculating the taxable income in the rental incomes. And then we expect this year these things being fixed and sorted out by the Supreme Court, and it's quite probable that for the coming times it's going to be allowed to deduct expenses such as depreciation expense for the part of the house that it's the construction, entertaining expenses that you are having because of that property, any kind of insurance policy you are paying, things like that. But this is a thing we're going to be seeing in the coming times, okay? Then besides of that, we have a really tiny amount to pay at the federal, as a state level, okay? It's also a kind of tiny contribution for the periods you are using the house for your own, for vacational time, or just the house is not rented out and it's just as your disposal. You pay a really, really tiny amount. That it's the explanation that it's here in the right side of the slide. That, to be honest, it doesn't work. We're going through that. It's a price that more or less you can pay a paella with a little bit of sangria. It's a tiny amount.
And just a quick question on that, Mark. As far as the no deduction of expenses, now that's not going to include any type of depreciation because I know when Americans come over, they expect depreciation expenses on rental
Yeah,
properties.
not
That is not
now,
going
not
to.
now, not now, but I have to tell you that there's a strategy if you want to go through that because you bought a property in Spain for many years ago that we are considering, depending on the case, to file retroactively a claim to be refunded for the expenses that we were incurring in the last 4 years that are not prescribed, okay? Just waiting for this final resolution of the Supreme Court and then not letting these 4 years that are not time barred of the past being prescribed and then we're losing that right. Okay, this is a thing to consider, and then we can talk about that if you want. As said, my emails from about around here. I'm a dinosaur with any kind of agenda to be scheduling, and then I'm the old way. I'm vintage a little bit. Okay.
No, that could be really big though. I appreciate bringing that up.
Okay, great. Then what's this? This is if you being a Spanish tax resident, of course, if you become a Spanish tax resident, you're going to be taxed for many things, as we were saying before. Okay, and then in being a tax resident, okay, it's totally out of question that you're going to be allowed to deduct a lot of expenses. The interest you are paying because of the mortgage loan that you are negotiating with Monica, then all the repairs and maintenance expenses, depreciation in relation with the building part, local town city hall taxes, community of owners fees. Okay, and besides of all of that, if you are renting that property not by months but for the long term as a residential use for somebody else, okay, then because of you are then contributing to the offering of real estate's long-term residential properties in the market, half of the P&L you are earning of for that total rental is exempt of taxation. Then it means that if you are earning gross 10, expending 3, and the net it's 7, 3.5 would be out of taxation. Okay, this is a thing that is also evolving now with the current regulations, but this is the way this is now. Okay. Then it's a thing to be in mind also if you become tax resident, you want to rent out something here. Then again, if being tax resident, you also have this tiny amount of presumption of income because of the days that the house is at your disposal as a vacational house, if that's the thing. And as said, we don't have to lose that time on that because it's a really tiny amount to be paid. Then when buying a property, as Monica was saying, okay, generally speaking, we are having a range from 6% till 11%, depending on the region. And it's going to be coming for the same thing under different names. It's going to be called VAT. It's the thing that would be the sales tax if buying a new development, okay? And if being a second-hand property, it's going to be called transfer tax, okay? There are also some stamp duty taxes to be paid. And bear in mind that all things we are talking now is if buying residential properties, and things could get more complex if being not residential properties, and also if you wanting to buy for rent. If wanting to buy for rent, sometimes you could be applying for a kind of system itself. It's called the VAT non-application to the case, okay, by the reverse charge mechanism, okay, and then at the end of the day you are just paying an indirect taxation that, depending on the region, goes from 1% till 3%, but that would be your final indirect tax bill for cases that you are renting out. This is a more complex things. We will be talking if you have a particular case about that.
All right. Well, thank you, Mark. I'll go ahead and finish us off here. And so really it's for US citizens that are making the move fully and who are expecting to really be a tax resident in Spain, like what Mark was talking about in those qualifications, there can be some incredibly difficult changes from your current financial plan within the States, right? You might not have access to your old financial advisor or old financial institution. And so you really end up needing to work with a cross-border advisor such as myself. There's also some additional tax filings that you might need to make depending on your new investment strategy. Now, one thing that we are seeing and has been a pretty consistent concern from my clients over the past 12 months, and probably on Monica's side as well, has been the currency fluctuations. I mean, the US dollar has lost 15% to the euro over the past 12 months. Deutsche Bank has came out and said by the end of 2026, they expect another 12 to 14% drop. Not that they've been right on every prediction in their history, but the dollar yield index, which is a comparison of the dollar against a basket of major currencies, and forecasted that out depending on a consensus of institutional firms, is really saying the exact same thing. And so, what that means for us Americans who typically have all of our investments and assets within the US dollar is we need to start diversifying or potentially getting a forward contract in place. We work with a few different currency partners who are able to do that and lock in a price. Think about if you had an offer in on a house in an accepted offer in February of 2025, and the house didn't close for 6 months, and this house would be in Spain. You had the house was going to cost you 500,000 euros and you had 480,000 euros or US dollars, excuse me, those flipped around 500,000 US dollars, 480,000 euros. That was about the exchange rate at the time. It's no longer the exchange rate. The exchange rate changed after those 6 months between the offer being accepted and closing. All of a sudden, you need to come up with much more cash, close to 550,000 US dollars. Well, a forward contract can lock that exchange rate in advance to make sure that, well, more fluctuation and devaluation of the dollar doesn't catch you by surprise. And all of a sudden, the dream house in Spain is no longer attainable. Now, the underlying assets within your investments can do a lot of this heavy lifting for you without the need of a forward contract. If we're investing on an international scale, looking at investments in the euro, both onshore within the United States in your existing investment accounts or offshore into different vehicles that we have to be really careful about how we do as US citizens, we need to make sure that you have that currency exposure to the euro and make sure that it is going to be a smooth process as you go and actually buy that property. Or if you're going to be living in Spain, all your expenses are now going to be in the euro, and we want to make sure that a 12% additional devaluation of the dollar doesn't drastically affect your lifestyle. And so we do assist in a lot of this planning, both with currencies, investments, financial planning as a whole, retirement planning, that your current advisor in the States isn't going to be able to assist with once you make the move into Spain. One thing that we really have to be careful with as I'm talking about all of this great currency exposure and hedging currency risk is we need to make sure that we are staying away from PFICs or passive foreign investment companies. It can greatly increase your tax filing costs. It takes CPAs in the States hours to file these for their clients. If I put you in a PFIC, your CPA would try to hunt me down and say probably some not very nice words to me. But it's certainly something that we can do this currency strategy and international financing without needing to really get into that space. And we always make sure that we're staying compliant on both sides of the pond. And so what I'd like to do next is actually open us up for Q&A. We are a little bit further than what the original plan was. Mark did tell me that he was a little chatty, so I was warned beforehand. But these are the promised QR codes. Again, mine is to book a appointment directly into my calendar. The Habeno and Monica's is for that pre-approval link to get started on your process. Habeno will contact you within 24 hours if you do submit that pre-approval application. No obligation with that as well. They can just walk you through the process and show you exactly what your loan could potentially look like. And Mark's is going to take you straight to his email to be able to connect with him and ask any direct personal questions about your scenario. But I certainly encourage anyone to be able to use these free resources. Obviously, our services aren't free as a whole, but we do offer these free consultations to be able to make sure that we are being educational and providing as much value. We know that Americans have a lot of questions when they make the move. Facebook groups are not the place to get those answers. Please, there's so much bad information on there that I see on a daily basis. But yes, let's go ahead and maybe tackle the first question. Looks like it's for Monica. Is the repayment of the mortgage by age 75 standard for all loans in Spain?
Um, yes and no. Once again, like as I said, there's no one single case as the other. I will say that the general rule it is that must be paid out by the year the holders will be getting 75, but we have seen and worked with some cases that we extended a bit further the age. But it's true that it's not the general thing.
Okay,
So
great.
just hope.
So it's worth speaking to you and kind of going through that process
Yeah,
to see what might be available. Great.
exactly. Yeah, I will say, sorry, Jacob, I will say that it all depends on the client's profile a lot.
Well, and this might be it looks like another question for you, Monica. Does investment income help qualify for a mortgage?
Yes, yes, it can be. Yeah, totally. But in terms, if we're speaking about the property and so on, the client may have a DTI quite high, but not still not reaching the maximum, which is 25. But once again, maybe a bit flexible up there. But totally. I mean, as Mark said, you don't need to be a tax resident here. You don't need to be living here. You can use your property for whatever source that you like renting out or just vacation 1 day per year. So that's totally fine.
Perfect. Mark, it looks like this might be a question for you. I have a child in Spanish public schools, but neither my wife or I are in Spain for 183 days. Would I be considered a Spanish tax resident? And would both my wife and I be considered a Spanish tax resident if yes?
Okay, this is a really, really good question. Okay, because the thing is that this is ruled in Article 9 of the law, okay, and literally, okay, what that article is saying is that if the spouse and minor age children, spouse and minor age children, one of the things that we used to say is that the tax office in Spain is making us thinking to the lawyers that we don't know what we are reading. Okay, but if we are reading properly, okay, it's saying the spouse and the minor age children. Then we feel that the interpretation for this kind of cases is clearly falling out of the scope of tax residency. And then indeed we are having many clients of us from the US that for many reasons, the last week it was because of one of the kids of a client of us from the US. He was coming to play football in Villarreal here in Valencia, okay, and the guy is going to be staying here for many months in Spain. And then the clear understanding of the rule is that we don't have to be thinking that the parents are tax residents because the kid being here, okay. But of course, be cautious with all of that, okay? Then I'm supposing that in this case, the kid is here, but you are keeping the majority of your assets in the US. You are doing most of the performance and the billing you are doing because of your professions or your business activities while being in the US. And most of the expenses you are in which you are incurring and still in connection with the US, you know. I'm thinking about the basic case that the kid is here and then from time to time you pay him a visit. If that being the case, we don't have to be scared about we being tax residents because of that.
Okay. Yeah, that's 'cause I definitely would have thought that both of them would be tax residents because of the kid, but that's a great clarification.
Hmm.
Mark, I think this one's for you as well. You didn't talk about any of the special tax regimes, Beckham or something new in Madrid. Can you briefly discuss those?
Okay. And that's really important, okay? Because when doing tax plannings for people, thinking about, okay, let me explain one thing that is important also before that. Um, there's many times that people are thinking about coming to Spain and then they're not falling into tax residency, okay? For people thinking about that, of course, always controlling the think about not having here in Spain the center of economic interest, okay? Then many people is playing with the game about spending in Spain around 90 days maximum every 6 month period, okay? And then you are not in the need of asking for a visa permit, okay? And then with that combination of you not being in Spain for more than 183 days, not having the need of any kind of visa permit that it's forcing you to consider yourself as tax resident filing things here. And then as said, you defending that your center of economic interest is in the US, you're not falling in the kind of more difficult area of the tax residency. But then people, of course, they fall in love for our country and then they want to stay here more time. And that's when they have to think about the way they move here. The tax regimes are totally important when thinking about that, because if you are generally speaking moving here for the long run, spending the vast majority of the year here, okay, you're going to be easily qualifying as tax residents in our country. And then the way you were paying taxes in the US at the end of the day is going to be creating your mindset about what you like to pay in taxes or not. Although maybe you don't like to pay anything, but you are comfortable in a certain threshold of taxation, okay? And then when maybe we're moving here, it's jumping high depending on the case. Then Beckham is giving us the chance, and it's applicable all over Spain, okay? That it's the first time you move your tax residency to Spain. We're talking about tax residency, not about you coming. You coming for staying and becoming tax resident, okay? And you were not a tax resident in Spain for the last 5 calendar and tax years at least, okay? You can benefit yourself for a 6 tax years period of time of the Beckham regime. The nice thing about the Beckham regime is that generally speaking, okay, you are only taxable for your labor incomes in a worldwide basis, okay? It doesn't matter if they are produced here or there, all of them are taxable in Spain, but at a flat tax rate of 24, then there's a further threshold that if you are earning more than 600K, you pay a 47, but the vast majority of our clients, labor incomes, they are under 600K, okay, and then they pay a flat of 24, okay? And then if they only produce this kind of labor incomes while in Spain or abroad, and in Spain they are not producing anything else, they are not taxable for any other kind of personal income tax in Spain, because all other foreign incomes, real estate properties that you are renting out in the US, brokerage accounts that are producing money in the US, okay, these kind of things are zero taxable in Spain, okay, for this 6-year time frame. Of course,
In Spain, remember Mark just said in Spain, those are still
yes,
taxable in the US. Something to keep in
that's
mind,
it.
guys.
And then they have to talk with the tax accountant or tax advisor in the US to say, okay, I'm able to defend my tax residency in Spain under the Beckham regime. How comfortable do you feel for then keeping at low levels my taxation in the US? And then the tax advisor there has to say, okay, I'm going to be applying a foreign tax allowance, yes, not. I'm going to be applying, yes, not this kind of benefits of the tax treaty, yes, not. But this is all from the US side of things, okay? But generally speaking, it's not usually a big thing from the US side of things. Again, if things are properly planned, and always chatting with the tax advisor there. Besides of all of that, of course, take care of other kind of things that could be understood as labor incomes also. If you are withdrawing money, for instance, from your 401k accounts, okay, then Beckham is amazing if it's matching well with your plans. And another important thing, Beckham has to be a true thing. Fabricating a Beckham thing with a total lack of substance, a total lack of sense, it's highly prosecuted by the Spanish tax office. The Spanish tax office has released many press releases in the last months by saying that Beckham is not something that has been created for people making a really nice jackpot, okay, moving here, being zero tax about a lot of capital gains abroad and things like that. Then we have clients that from time to time they appear. Now, the last days, one that was jumping into my inbox, and then I totally decide you are not my client, okay, by saying, I'm planning moving there because I'm going to be putting my company into an IPO, and then I'm going to be making millions, and then I'm going to be creating something artificial about coming to Spain. This is not the aim of things, and you could be really in a critical situation if you're trying to do this thing. But for other things, planning could be made in a smooth way, and we plan many Beckhams. Besides of Beckham, and only for the region of Madrid, we have Mbappe. We are not so original. Every time that Real Madrid has to hire a new football player, they create a new law for making that taxes on salaries are lower for these people. It was in 2010 for David Beckham, and now in 2024 for Kylian Mbappe, the French football player hired by Real Madrid. How it works, this system? You have to move your tax residency to the region of Madrid. And again, you cannot be considered tax resident in Spain for the last 5 years at least. And it's a quite easy to implement system that if you move here and then you invest in a new financial assets portfolio, that financial assets portfolio can be kept in the US or in Spain, and then with Jacob you would be dealing about what can be done or not in the US depending on the limitations you could be having as American citizens, okay? But then you create this new portfolio, and then for every single penny you have invested in this brandly new portfolio you have created, in the year you become tax resident in Madrid, you have the right for a tax allowance for a 20% of that portfolio. Then let's figure that you move to Spain, to Madrid to live in 26, to be tax resident in 26, and you created a new brand portfolio of, I don't know, $1 million US, okay? Because you invested in Amazon stocks, Google stocks, okay? Then stocks are working well, okay? But ETFs, maybe that not so much, okay? Then if you want to go further, we have to talk about that, okay? Then this new portfolio you created would be giving you a 20% right for a tax allowance in personal income tax to be filed in Madrid. And then this can be offset against your tax bill in Madrid for a 6 years period of time. Then Mbappe, it's easier to implement it than Beckham, but Beckham has things that Mbappe has not. Mainly that Beckham is making you not taxable for most of your incomes produced abroad, okay? And another important thing, Beckham is putting you out of wealth tax and solidarity tax. Then you are not forced to be paying any kind of wealth tax for all your wealth abroad of Spain, okay? Then the right fit for your case is a mix of saying, if it's okay for you keeping the thing of the low profile of under 90 days per 6 months every semester, non-tax resident scheme, let's say, a general tax resident scheme because it's not affecting so much your case, or a Beckham thing that it's a wonderful thing, if well planned and fitting for your case, or maybe going for a Beckham, but by you knowing that then you are not choosing a la carte. It's you live in Madrid, okay? It's not about you show a PO box in Madrid. You live in Madrid, and that's your bet for living in Spain, let's say. This is the general frame for these options.
Well, you can definitely tell where Spain's priorities are when they're creating tax laws to attract some football talent. And it's
Um,
funny that, the Beckham law doesn't excludes more international income than Mbappe when, David Beckham had
to be
quite a bit
honest,
of
you know that
international
it's the thing
assets at
that
that point.
it's a beautiful country for living, a beautiful country for resting, for enjoying life and eating and drinking. But our politicians, but okay, but maybe if you are from the States, maybe you're going to be thinking something similar then. Enough.
Well, fair enough. Hey, at least it's for athletes. Next question up, and I know that we are running out of time quickly, but can US citizens hold IRA investments outside of the US? It's a common question right now, particularly with the fall of the US dollar and with political turmoil in the US, to call it, to be polite. There are certainly ways that we can, through some self-directed IRA LLC vehicles. It's not necessarily right for everyone. It's not necessarily going to be a perfect structure, but we can certainly help with that if that's desired. Couple more questions here, and then we will go ahead and wrap up. This next one, Monica, is for you. Do you do any type of net worth loans? Which I think is referring to, which I saw in JP Morgan quite a bit. If someone just has a bunch of money, not necessarily producing income off of that money, are you able to lend off of them just, having 5 million in the bank?
Like the claim being the lender, you mean?
Well, no, the client just having, a sizable portfolio or, cash holding, whatever it may be, and be able to, lend off of not necessarily an income stream, but off of them having assets.
No, no, like what you refer, it's not totally allowed in here, I'm afraid.
Okay. Well, I think that is going to be another one of those, culture shocks to Americans as they're buying a house. Just had another question come through. What about buying a house with cash? Well, I certainly have had clients do that, completely possible. The closing costs, other than I believe it was a 1% fee towards Habeno, which is very standard for mortgage companies in Spain, as well as banks in Spain. 1% is pretty standard. The buying the house with cash is certainly doable, but you still do end up with a lot or with all of those closing costs, other than that mortgage fee. One thing I'll say though is because interest rates are so low, it can often still make sense to use a mortgage to the fullest extent and invest your funds in a fixed return vehicle, even so that you can make sure that you're essentially creating an arbitrage or guaranteed beating that interest rate within an investment vehicle so that you pocket more money at the end of the day, even after taxes. Um, in the States, right, I think the average 30 years, right around 30-year mortgage is right around 6.5%. Well, it's a little bit more difficult to make sure and guarantee that you're going to beat that 6.5% after taxes on every year. 3%, 2.5%. That's certainly something that we can set up and make sure that it's very easy to do, in fact.
Jacob, and then in relation with this question, okay, I feel that I totally agree with you. Now, the arbitrage you can be making for the cost of money is an amazing option going for the mortgage loans. But besides of that, I would be saying two things that are also relevant in that regard. First of all, if finally the Supreme Court, okay, is finally accepting this deduction of expenses in houses that are totally or partially rented out by foreigners, we're going to be having also the interest of the mortgage loans as deductibles, okay, and then it's going to be adding an extra layer of tax efficiency and of money efficiency, okay, because we're going to be having more savings, because if we are saving at 24 on that interest expense, then it's making cheaper the interest that at the end of the day you are having as an expense. And finally, another important thing is that when buying with cash, okay, but generally speaking, it's applicable to all cases, okay, but of course, you are always exposed, you are always under the application of the money laundering controls that we have in the European Union, okay? If buying with your own money, okay, then it has not major things that the bank is going to be requesting you, then where the money is coming from, which are your kind of wealth in the US and where it comes from. But when coming from the US, things are easy to sort out. They strongly rely in the tax returns coming from the US, and then you showing the tax returns from your last years by showing that you were producing this money, or maybe you inherited this money, and then or it was for the long run managed by a brokerage account, okay, and then it's so easy to sort out that, and then passing all these money laundering controls when coming from the US.
Yeah, I know there's certainly a few countries out there that it's not quite as easy to get
Yes.
through. Sure, Monica has seen a couple of those. Well, guys, we are right at an hour. I need to get these guys home for dinner. And so yeah, it was a pleasure, Mark and Monica, having you both on. I'm sure we will do this again. For those of you watching the recording, these QR codes will stay live even through the recording. So if you're watching this on YouTube and need to book an appointment or send Mark an email, please feel free to use these, and we will make sure to connect with you. But hope everyone has a great night, and thank you again, Mark and Monica.